Hi, I'm Alan Hovis. I'm a real estate broker, contractor, and property and casualty insurance agent here in Florida. We've put this channel together for you to answer your questions about buying and selling real estate here in Florida. If you've got additional questions you haven't found answers yet to, just put them in the comments below and we will get back to you. Or maybe we'll make a show about them. Thank you for watching.
Today we are speaking with one of the premier mortgage brokers in the Sarasota-Bradenton area, but he's licensed for and can practice in the entire state of Florida. I have worked with Shawn Martin for a good 15 years and can personally attest to his knowledge and professionalism. That is why I chose Shawn to do this mortgage series. So let's ask Shawn all of the questions we usually hear when working with buyers. Shawn, thank you. As a realtor myself, I want to know, what are the things that I should be doing and not doing if I'm saving for my first house?
It's a very important question. So very often people that are saving for a home, they, for whatever reason, have decided to save money in the form of cash under their bed, in their ceiling tiles. And I will tell you that, oddly enough, as pure as cash is and as wonderful it is not the most desired form of asset for a mortgage transaction. We don't give it any consideration. Important is to have your money in a bank, have the money seasoned, have the money be left there for over 30 days or at least for a full statement cycle. Important not to make large deposits. People come, they're ready to buy a house, they send their bank statement. First day of the month they had $500 in the account, and then by the end of the month they have $150,000 in the account. You ask the client, where did you get the money? They say, I'm not telling. It came from somewhere. And banks are going to want to source the large deposit. A lot of times it comes from family members. You can get a gift letter. There's things you can do, but it's very important to have the money that you're going to utilize in the transaction in your account for at least a full statement cycle, or to be able to document where it came from. So that's an important thing to do. Another thing to do in preparation is protect your credit. Don't have your credit pulled by everybody that wants to look at your credit score. Protect your credit. People don't realize every time somebody inquires in your credit, it could have a negative impact on your credit score, which ultimately has a negative impact on the interest rate you're going to pay. Go ahead.
So, Shawn, say I'm a little further down the road. I have a house, but I want to sell that house and I want to buy a different house.
So a lot of that's happening right now, where people have a significant amount of equity in one home and they want to either upgrade or they want to move to a different part of town or whatever their situation is. There's several things you can do to prep for that. Number one, you need to know what you can afford, right? So number one is go through the pre-approval process. Find out, without selling my current house, what can I afford in the form of a new house? Many people in this situation, ultimately, they want to bridge the equity. That means they want to take equity from property one and they want to put that as the down payment on property two. How do you do that if you haven't sold property one yet? Many times people can use a home equity line of credit. There are bridge loans out there and basically allow you to take money out in one property, use that as the downstroke, and then borrow a smaller mortgage on the new house. Once house number one sells, all of those liabilities are paid off and you're left with whatever small mortgage you have on the new one, or none, depending on how much equity you've taken out. So usually getting pre-approved to figure out what you can do is an important part of that process.
Same question. Okay, especially important to us in the industry. What are the circumstances that you can remember where things just couldn't be overcome and it killed the deal?
Yeah, we try to avoid things that are going to kill our deal. First of all, every scenario is different, right? So for me to be able to say, okay, this is something that some things have only happened once or twice in my entire career. Obviously, do not change positions as it relates to job, going out and getting a new job, or having somebody else sort of come along. And don't quit your job in the middle of your loan application. I'll just stop right there. Don't go out and buy new furniture, Home Depot cars, do all these things in the process of getting a mortgage. It just complicates things. Does it always kill the deal? It doesn't. Could it? It absolutely could. So try not to have your credit run by anybody while you're in the process of getting a mortgage. Quick scenario, I had a friend of mine, we're doing a mortgage for him, it was a refinance, we're going to save him $2,000 a month on his mortgage. In the middle of the transaction, he goes out and he buys not one, two new cars. He barely qualified for the new refinance. He buys 2 new cars. I called him on Monday. He did it over the weekend. I said, what did you do? He said, oh no, it doesn't matter. The money I'm going to save from the mortgage is going to pay for the new cars. Well, I had to break the news to him. I said, unfortunately, we're not able to do the mortgage anymore because the new debt is more than you can handle with your current income. Long story short, don't buy a new car in the middle of a mortgage. You want to go buy a new car once you get your mortgage done and everything qualified? That's something you can consider, but don't do it in the middle of the process. Little things like that. I'm trying to think of some other things that have come up in my lifetime, caused mortgages to go sideways. Usually it's related to job, and usually it's related to credit. Off the top of my head, I can't think of anything else, but stay away from those. Quitting your job and buying new things while you're going through the process.
Shawn, thank you. Appreciate it. Special thanks to Shawn for taking the time to answer these mortgage questions for us. Now, Shawn runs the Martin Funding Group, which is a division of Cogent Bank. If you'd like to speak to Shawn directly about applying for a Florida mortgage, their number is 941-349-3863. His email is shawn@martinfunding.com. And we'll put a link to their website in this video's description. Thank you for watching, and we'll see you in the next video.
Hopefully the content in today's video has helped you answer some questions. If so, please like and subscribe. It helps us keep the channel going and answering all of your questions. Now, I work in the Sarasota-Bradenton market, but we have referrals for agents all over the state of Florida. My contact information is below and in my website, hovis.com. And if you are a Florida real estate agent, please contact us if you'd like to be on our referral list. That's it for now. We'll see you in the next video.